Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. Now, this week saw the passing of Aadhaar, or Target Delivery of Financial and Other Subsidies, Benefits and Services Bill 2016. Now, the bill was passed as a money bill in the Lok Sabha. The bill should give the government significant push and legal backing in implementing its direct benefit transfer schemes. The Finance Minister Arun Jaitley has said that targeted subsidies through Aadhaar cards of LPG consumers had resulted in savings of over 15,000 crore rupees at the centre. Now, the government's drive for financial inclusion has already resulted in over 210 million no-frills accounts and 34,000 crore rupees being deposited in them. Now, the questions we are asking today is, what are the challenges and opportunities ahead in using Aadhaar to make India more financially included? And what are the real savings this effort can deliver even as it comes together? And how can the banking system benefit as a whole? Joining me to discuss this are Soumya Kanti Ghosh, Chief Economist at State Bank of India, and Dr. Govindraj Jagidar, Economist. Thank you both for joining us. Soumya, let me begin with you. Now that the bill is passed, what are the key benefits that you're seeing or the key takeaways that you're seeing for this bill in terms of delivering the benefits that it was set out to do?
I think this passing of the Aadhaar bill is a landmark in Indian history. The most important thing is that the passage of this Aadhaar bill will ensure that the benefits actually reach the intended beneficiary, and I think till now there has been a lot of legal hassles also. Sometimes the court has turned it down, the court has made it that whether Aadhaar card could be used as a tool of identifying a beneficiary or not. Now I think all this will be put on rest, so that is the most important thing. So in my sense, the first step of universalization of financial inclusion through the targeted subsidy payments to the intended beneficiary has been reached. Now, the second step which the government is already looking at is to identifying the intended beneficiaries. So, I think if these two things come together, the government will be able to save a whole lot of money on these subsidies, and that money could actually be used for more productive purposes. So, in a nutshell, I think this is a very landmark bill in the history of independent India.
Right. Okay. So, one of the points that Soumya is talking about is the whole identification and ensuring that it goes to the right beneficiaries. In the sequence of things that we want to achieve or we want to lay out, how would you rank them, Brinda?
Firstly, I would say identification is the most important problem, because the government is spending something like close to 4.2% of GDP on subsidizing goods and services. So that's a huge amount. And also,
so it's over 3 lakh crores.
Yes, and also there are huge leakages. Fuel, fertilizer subsidy, these alone have about 40 to 50% leakages. And as the economic survey pointed out, that more than 1 lakh crore rupees goes to people who are actually well off. So it's very important to identify the beneficiaries and also to make sure that those who really need this are not excluded. So both including and excluding, that is important.
Right. So you're saying to that extent Aadhaar is a limited proposition?
No, I think it's a very important, a very good first step, because after this you need a bank account where you will transfer the money, and then you need access, the beneficiary should be able to access his account.
Right.
So these are the three chains which I think Aadhaar is a very, very important link in.
So Soumya, we've been looking at this whole trinity, Jan Dhan, Aadhaar, mobile. Now, how has this trinity come together, at least in the case of State Bank of India? What is the experience in terms of numbers?
See, I will tell you one example over here. I think if you Govind, that let me give you just little bit snapshot of how this actually has been playing out. As all of you know, that the Jan Dhan accounts that the government has been opening for this financial inclusion has been a huge success, and now more than 20 crores of accounts have been opened. And State Bank has always been in the forefront, and it has opened close to around 4.5 to 5 crores of those accounts. And if you remember, when these accounts started, and they had actually more than 90% of the zero balance account. Today, the number is less than 50% and is still declining. So, basically the point which that economic survey and all of you are mentioning about the JAM Trinity is that through proper uses of the mobile numbers, these accounts, the bank has been able to use these accounts and make possible that these accounts show a significant amount of traction. In fact, if you look into these accounts, mostly in some parts of the country, like eastern part of the country, our experience shows that there has actually been a significant traction in part of the persons using these accounts as paying back money as through remittances and also cash deposits. So, my sense is that Given this fact that these accounts have gained a lot of traction, the zero balance in this account have been coming down to below 50%, have come down to below 50% from more than 90% a year back. These are very welcome developments, and the use of technology and also the fact that the RuPay card has been attached to this account will make it much more easier than for the rural folks to use this account to transfer money and make also it a profitable proposition on the part of the banks on a short to medium term. So, in essence,
okay, Soumya, a quick sort of follow up question. How does this add up for the banking system? I mean, there are more accounts being opened. There is a way of identifying the recipient or the beneficiary, as the case may be. There is the mobile, which obviously enables by using either the number or the technology to bring all this together. What does this mean for the system?
See, again I will give an example over here. For example, as you know that the mudra loans which at the banks are now opening, that has also been a huge success. Around 1.6% of the all scheduled commercial bank credit actually now goes to this mudra. And you will be surprised to know that a large number of these mudra loans are actually tagged to the Jan Dhan account. So, basically the point is that people who have opened Jan Dhan accounts, some of them are also, a large part of the people are also being tagged onto the mudra accounts. So, basically the more you have this technology, the more you open these accounts, the more you see the credit worthiness of these accounts, you can offer them better products. The banks can offer them better products, for example, like mudra, better targeting, and this in one way could also increase, apart from increasing the deposits of the banks, would also ensure that the banks get enough credit out of these accounts to make it viable over a point of time.
Brinda, you said exclusion was one challenge or one concern in future. Why is that?
Because people who actually need the money, they may not be able to get it, because the moment you replace discretion and you introduce technology, you're able to identify who the real people are who need the benefits, and then you can transfer it. Now the thing is, it's like I said, in India, about of 6 lakh villages, only about say 25-27% are actually, they have bank branches which are within 5 kilometers, so people can access.
But should you need bank branches is the question.
No, but the point is you can overcome this, the last mile challenge, through again the mobile usage. We have more than 1 billion mobile users and more than 1.4 million agents who are servicing these. So the ratio is much better than, even better than the banking correspondence, or as you rightly say, bank branches physical presence may not meet this challenge, but it is the mobile that we have. Like for example, if you take
so you're saying that exclusion is a challenge, but is something that will be overcome because of mobile?
Absolutely, will be overcome because
so
of
then there's
mobile.
No concern, at least on that front.
No, not on that. See, the moment you identify the beneficiaries, the moment you're able to transfer their account, and the moment they're able to access the money in their account through the mobile, then I think that challenge is really met. And as a government, as you yourself pointed out, that more than 15,000 crore of savings is there on just the LPG. So there are so many schemes like this which the government will be able to give to the targeted identified beneficiaries.
Right. Okay. We're going to sum up very quickly. So Soumya, can I ask you, if you were to look a year ahead or a little more, what is the world with an Aadhaar that's fully functional, more than 1 billion Aadhaars issued, obviously the number of accounts in no frills going up maybe to 300 million, and obviously the mobile also having permeated much more deeply in the countryside?
No, I can see a huge benefit. For example, today, as you know, in the current budget, the total subsidy is around 2.5, I mean basically 2,53,000 crores, so which is a little lower than the 2% of GDP, I think 1.7% of GDP. So of this, the fertilizer subsidy is now the maximum amount, which is around 0.5% of GDP. So, and given the fact that the government has already announced that it will route even the fertilizer subsidy through these Jan Dhan, through these accounts, I see a huge benefit over a point of time. The oil subsidy, given the fact that the oil prices have declined, we are already getting the traction of saving a whole lot of amount of money. LPG accounts are now entirely online. The fertilizer subsidy is coming online, and now all these interest subvention scheme, all the other schemes, if it comes online, I think the entire leakage which has been happening, basically if somebody, say for example, for the PDS system, somebody estimated the leakage could be as high as 30 to 40%. So all this, I think, will also ensure that the poor gets the right product, and the leakage through all the systems of the government programs like the PDS, the other programs gets minimized, and that amount of money the government is fruitfully able to use for other productive purposes.
Brinda, a year ahead from now, how does the world look?
For example, if you take fertilizer subsidy, out of the 50,000 crore for urea, just about 15,000 reaches the small and marginal farmers. So if you are able to bring in Aadhaar, seed it with Aadhaar and directly transfer it to their accounts, then look at the huge savings that is absolutely, which comes in right away, and it goes to the targeted beneficiaries. So we have fertilizer, Nariga, now again that's the Manrega, that again is
a subsidy scheme which deserves better or needs better verification and identification.
So then there's education, there's health, so all this
is
together.
privacy a concern? I mean, many people are...
It is, but not an overriding concern like it is being made out to be. I think there are issues there certainly, but those could be resolved. Privacy, yes, could be something, but then that can be resolved. And I think the economic benefit is far overriding than this concern that you mentioned.
Soumya, economic benefit overrides privacy concerns?
No, I think privacy concerns are a little bit overplayed. I think the privacy concerns are well taken care of. Yes, I agree that in any country, I mean, these issues will always be there, because if you are living in a digital world, if you are, for example, if I am on the Facebook or Google, I am being watched all the time. So from that point of view, I am actually living in a digital world where privacy, I mean, I have to take care of my privacy, and I am sure that these numbers, apart from the security purposes, these numbers will be used by the government for only the benefits which is going to be transferred. So I don't think privacy concerns are that of much of an issue, and we should actually have to live with it in a world today where technology is freely transferable across the borders.
We are living in a digital world, and so it's big data that drives policy now. So this data will also help the government to streamline their policies and other delivery mechanisms. So in that sense, again, I come back to my point, saying that the economic benefits are really huge and massive.
Right. So, and focus on inclusion and ensure that there is no exclusion, and of course make sure that it rolls out to many more things and we plug the leakages. We run out of time. Thank you both. We've got to go in for a break. On the other side, we'll look at India's dwindling exports. Stay with us. Welcome back. India's merchandise exports fell for the 15th straight month by 5.7% to $20.7 billion in February this year, against $22 billion in February 2015. Now, the government had earlier set an export target of $300 billion, but now reports say that this might be revised down to $260 billion. A continuing global slowdown, including in China, and a steep fall in commodity prices is said to be responsible for slowing exports. Now, as the financial year draws to a close, the big question is, does the coming year look any better? What are the signs of recovery, if any, beneath the headline numbers? And more importantly, what are the urgent policy fixes required at this point, if any? To discuss this, I'm joined by Prem Malik, immediate past chairman of the Confederation of Indian Textile Industries, and Madan Sabnavis, chief economist of Care Ratings. Thank you both for joining us.
Thank you.
Yeah, Mr. Malik, let me start with you. So let's use textiles as an illustration. Exports were about 42 billion last year. We had targeted 47.5 billion this year. Looks like we're not going to meet this target, but actually go back to last year's figures.
Yeah, we may end up about 40 billion.
Right. So actually lower than last year, in keeping with the rest of the slide.
Right.
So why is this happening?
So basically there is a complete slowdown. Look at the various markets. These was our traditional markets. Europe being our traditional market, the entire Gulf being our traditional market, USA another traditional market. US has more or less stayed at the same level. So we will not see any growth coming out of US. But Europe has slowed down considerably. Because of the oil situation, the Gulf is slowed down. So all these countries, and especially not only this and the entire emerging markets in the East itself, are themselves in
so
trouble.
You're saying a falling commodity price regime is directly linked with falling demand, particularly for...
So it's a basically demand and supply situation. So
Okay.
at the moment, supply is higher than the demand,
Right.
and that's causing the problem.
Right.
The second issue is basically the currencies also. There's no stability, there's no consistency. So this kind of environment, unless comes back, that you have a consistent foreign exchange regime with a little fluctuation, it will always be there, but not a topsy-turvy situation.
Okay, right. So, Madan, if I can get a slightly broader view from you, exports, as we've just spoken about, have been slipping continuously. We're also trying to understand what lies ahead for 2016-17, and could things be brighter, and if so, what could drive it?
No, in fact, Govind, I don't think things can be substantially better, because I think there are two factors which have drawn down India's exports. One has been the slowdown in global demand, because I think our exports are more demand driven rather than by any kind of exchange rate advantage which one could get in terms of competitiveness. And the second is declining global commodity prices. Now, declining global commodity prices is something which we expect to prevail even in 2016. And going by World Bank estimates, I think prices are going to continue to be fairly low, which really means that the value of our exports are going to continue to remain low. Especially if you look at something like petro products. Now, there was a time when around 20 to 25% of our exports were coming from refinery products. Now, with the crude oil price coming down, automatically the value of this has also shrunk. So this, combined with the fact that we have low demand conditions, which are not really going to turn around in any significant manner, gives me the impression that things will at best remain stable. I'll be quite happy if we get into a positive growth territory, but I won't be surprised if we remain where we are.
Right. So if I were to understand, Mr. Malik, things are not going to look or improve. What can we do to then either become more productive or more efficient, or ensure that we get a better share of global markets?
See, of course, the productivity goes without saying that we need to improve our productivity levels. But you know, the more you do produce in a market where the demands are low, that's also going to create a little bit of imbalance. But without saying that, the productivity is one of the answers, but not the ultimate answer in today's circumstances. So today's circumstances is where the markets are not buoyant, markets are not even stable, markets are down. So where there is a mismatch of demand and supply, what we need to do as a country, that's more important.
Right. So
how do we achieve what we had intended to achieve or what we were achieving?
Right. That's so from a macro point of view, you talked about currency being one aspect. So that is an important aspect. What are the other potential policy prescriptions? You
see, in policy prescriptions, in my opinion, the 2-3 basic things need to be done. A is that really as a government now, as we talk of more of less of governance, we should, but in governance, the policy, business should become as a major tool in the hands of the government. That we should not be only talking of other things, we should be talking of business doing with the rest of the world. That means government becomes proactive in negotiating proper FTAs and RTAs. That's very important.
Free trade agreements,
yes.
And regional trade agreements.
If you have to remain in this world, you have to collaborate, you have to work together, and people are trying to create blocks. And if you are not part of that block, you are going to be singled out.
Right.
And that's
so we do have some FTAs.
But those FTAs are not effective FTAs. Take for instance, today you have an FTA with Bangladesh, you have with Sri Lanka. Now these kind of countries, we are at the giving end, we are not at the receiving end. What we have to see is what we should give and what in turn we should get. So that's the kind of the give and take that we have to do.
So what would be one instance? So let's say, assuming the government is, as you said, were to become more proactive in signing more free trade agreements or regional trade agreements, what could be an example of that proactivity?
See, the proactivity, look at the EU FTA. I mean, take for instance in EU, if we are talking of 0 for 0, one of the largest market in the world, as a combination of 27 countries, is one of the largest market. And we have been talking of 0 for 0 duty with each other. And this is now, years have passed in, and we have not been able to negotiate those kind of an FTA. So I think if these kind of FTAs are going to take that long, the advantages to the country are not going to come. And meantime, others will pitch in and take away those.
So FTA is one aspect which is somewhat external facing, and I'm going to ask you about internal as well. Let me come to you, Madan. So what's your sense, if we were to look at the 2 or 3 policy areas that we should be focusing on in order to make exports either more competitive or more efficient, or maybe is a larger scheme, make it easier, what would it be?
No, in fact, I would tend to think that what the government can do through policy is more or less limited in a market which is largely demand driven. So while we say that we need to have better infrastructure so that we become more competitive in terms of costs, more SEZs, maybe of free trade agreements, I think all these will be helping specific products at a margin. But on the whole, I think we cannot go against the wave if the global economy does not really pick up, if we don't have enough demand coming from our main markets. I think definitely there will be barriers in terms of growth of exports. There was a period of time when we managed to diversify our export basket in terms of countries. So instead of being the traditional US or the Euro region or Southeast Asia, I think Africa became a very important market for us. But I think at a certain point of time, we see a kind of saturation taking place. And unless there is kind of revival in demand, to my mind, I don't think there can be a significant dent at the macro level for our exports.
So let me take a step back and ask you, how critical is it for India to get its export numbers right and also a growth in export numbers?
See, it's critical for us to the extent that we need to maintain a current account deficit as well as our trade deficit. Now, in this kind of a scenario, we have seen that we have benefited in net terms in terms of a lower trade deficit. So therefore, I don't think exports are a major concern in terms of our external account. But for those companies or those industries which are export dependent, I think their corporate performance financial performance has been affected on account of a slowdown in exports. So at a broader level, to my mind, in this kind of a scenario where global conditions are down, prices are coming down, importers tend to gain more than the exporters. So therefore, in net terms, we are better off. But at the individual level, at the domestic level, companies which are based on exports, they have definitely gotten buffeted on account of what's been happening.
We talked about the external aspect, which is being far more proactive on free trade agreements and regional trade agreements. What about internal? I mean, what would be the areas that you would want the government or you would expect greater policy focus on?
See, the another two areas are basically, one is the infrastructure. You look at the cost of carrying the goods, especially for exports. In India, there's too much of costs. Those costs have to be handled. You see, if you send goods from here to China, you can ship it at $150. But per container.
Per container, okay.
But if you were to ship goods, say Punjab to Mumbai to the port, the cost will be at least 4 times the value of that what you are able to ship to China. So your internal transportation
So
cost.
what would it be, container to container, just as an approximation? If you were to ship a container from Punjab to Mumbai, as you said.
Mumbai, it will be something like $400, $500.
Okay. So much more, okay.
Much more, 2 to 3 times. So what we have to see is that how things start moving faster and cheaper. That's the kind of...
And in which obviously GST will play a role when it happens.
Yeah, when it happens. But as of today, it's not there.
Okay.
So that's one area that you need to see, that debottlenecking your infrastructure issues.
Okay.
The second is, in this kind of a circumstance, especially when, as I said, heard from my other colleague, exports may not be so important for the country. It's very important for the companies who are into export business, because they have set up their factories and their capacities based on exports. So it becomes the duty of the government to ensure that these remain active, productive units. If that has to be done, the government policy framework should be such that at this time, and we had done in 2008, when chips were down for the world, but India was able to do, because India was proactively had taken certain steps. Take for instance now, interest rates. You have to compete in the world. And today as an exporter, if I have to pay 10%, 11%, and others are able to do business at LIBOR, there's a big difference.
Right.
So what can government think of to do that?
Right.
Similarly, rather than losing on the entire spectrum of export, whether we can look at incentivizing certain products.
Give us an example, we're running out of time. Yeah.
No, take for instance textile. I mean, look at textile and apparel. It gives you a lot of employment, it gives you a lot of foreign exchange, and it doesn't then import dependent. So everything you earn, 100% you are earning out of them. So at this moment, when the chips are down, we should look at little more proactively. Not the government has not done it, but it's not sufficient.
Okay, we've run out of time. Thank you so much for joining me. Thank you, Madan. That's all we have time for on this edition of Policy Watch. We'll be back next week, same time. Thanks for watching.